Hello, everyone, and welcome to our very last SoCal housing market update of 2020. So, in addition to our normal slides that we're going to be going through briefly this week, I've also prepared sort of a 2020 year in review. And the idea behind this is to kind of really have a little bit of perspective. I think this has seemed like a really crazy year in the middle of it, but I think it's always important to kind of follow the data and see what lessons can we learn for 2021. My name is Stephen Mead. This is Domicile Real Estate for people who love houses. And let's go ahead and begin, since this week is a little longer than usual and really kind of a lot of unique insights and data to go over. Once again, this is for Southern California. And by Southern California, we run our stats based on Los Angeles and Orange counties. Okay, so what are we looking at? Our new listing data. As you can expect, this is a little bit of a lame duck week. And what I mean by that is, not a lot of sellers really want to launch their listing on the market between Christmas and New Year's and or over Christmas week in general. So if you look here, you'll see that, we're down over a third, right, in new listing activity. Probably about the same here in our $1 to $2 million category. So hardly surprising data. I think what's always interesting though is, I talk about this relationship of supply and demand, and that's exactly it. This is a relationship. So it's important to understand how the new listings and the new escrows play with each other rather than just looking at absolute numbers. So if we go over and we do take a look at those new escrows, we see something interesting happen, right? Like it's definitely down. Down is to be expected. But what's shocking here is that it's not down by nearly as much. Right. So if things went down a third in our under 1 million category, they probably only went down more like, I don't know, maybe a quarter, a little bit less. And if you look here in our 1 to 2 million category, boy, they hardly dropped at all, really, in terms of that number of new escrows. And when you see that, that actually means that the market is tightening, right? Sellers are pulling back and offering houses on the market, but buyers are not slowing down as much. And so if we take a look, guess what? Surprise, surprise. That is exactly what the numbers show by our absorption rate. Now, just as a reminder, our absorption rate is sort of that ratio of new escrows, that's homes that went under contract in the last week, to new listings that came on the market. So if it were a one-to-one relationship, that'd be 100%, meaning 100 new houses came on the market and 100 new listings went into escrow in the same week. And if you look at that, you'll see, we've been maybe for the last month, even almost kind of down a little bit. And boy, we just bounced back up a little bit here, over 80%, which is what we consider a very competitive seller's market. And if you look here on our $1 to $2 million category, you see we have this kind of crazy jump. This means that, a lot of that inventory that might have been sitting just got sucked up, right? This past week, it's not being replaced with a ton of new houses. So as you might expect, what happened to our average pending list price? It shot back up. And in fact, we are almost at a high point here. And, it's very interesting to see these kind of results this week. I'm always a little cautious. I don't think you can ever really use 1 week of these kind of results independently because this number does bounce around a bit. But if you look past here, you definitely see a trend line that is heading upward in price. And this is again for our under $1 million category. And now we also have our list to close ratio, right? This is where we look at, on average, where our listings closing relative to their list price for homes under $1 million. And guess what? It is around 101%. That means on average, if you were looking at $600,000 houses, if they are listed at 600, on average, they are closing at 606. And, that really just is astounding. And it says that, I think you have sellers and agents who are really cautious to test the market on price. They would rather be more cautious in the pricing and let the market bid it up. And, that's just a very interesting strategy. But, I think one of the reasons that we're seeing that, if you're the kind of person who's thinking about selling, right? And if you're thinking about selling, that means the reality is you're probably also thinking about buying. Now, you might be relocating, but you might also be looking for another home in Southern California. And if you're doing that, you are very acutely aware of having to try to organize that move and time it. And the advice that we give our clients in that situation is, don't try to go too hard on price, make the most compelling house you have, let the market fight over it and bid it up. And then that way we can dictate terms. For example, both of our transactions that we have with sellers right now, sellers are getting a 60-day window where they can stay in the house after closing. So this really means that from the point they accept an offer, they have 90 days in that house to find another home and close on it. And to be able to get those terms is really important. So I think that's one of the reasons why we're seeing these sort of list prices aren't jumping quite the same way that the closed prices are. So if we head back in here, onto the next slide, days on market for new escrows, right? So this is one that we watch pretty closely. It jumped up last week in both of our price categories. And there's always that thing, is this the beginning of the end, right? If we look at a trend, we've definitely seen that it's been going up. Our market does tend to slow quite literally towards the end of the year. Homes do take longer to sell. But, in this past week, we actually dropped down, a day, right? And I mean, these are very minute changes. This graph might look like things are jumping up, but if you look at the scale here, each one of these little bumps is a day. So yeah, things went up 3 days and then they dropped back down a day. Same thing here, they dropped back down a little bit. I don't think you can read too much into this. I think this is still very much an active market. The homes that are desirable, that people want, those are the ones, they are still getting multiple bids. They are still getting bid over list price. None of that has really changed, despite this being arguably the slowest week of the year. This past week and the week we are right now are arguably the slowest real estate weeks of the year. So our final thing here in our weekly review, before we move on to our 2020 review, is looking at this payment on a median priced home. And what I think is fascinating here is rates dropped, and yet this sort of factor jumped up. So we're now running, roughly 94% change of what the payment was for median price home back in June of 2018. And the reason for this is median price of home is jumping. We had a really significant jump in that statistic this week. So, I think it's important to understand prices are still very much on the move. They may not be moving quite as fast as they were 3 or 4 months ago. And when we look at our year in review, I think that's going to kind of snap some of these comments into focus. So without further ado, we're going to get on to our year in review. This is 2020. I like doing this because I think sometimes when we're in the middle of these markets, if you are actually looking for a home, if you're actually selling a home, or in the case for us, if we're actually working with clients, I think it is very easy to get caught up in the emotions at the time, and having a little bit of perspective, kind of more of a macro view, being able to look back at the whole year is really important to do that. And one of the ways we can do that is by comparing 2020 to 2019. And I think that that's really important to do that, to see how is it similar and really how is it different if we're trying to kind of glean what insights can we get for 2021. So if we start off here, I think this is probably one of my favorite graphs of all. And if you look here, we've got 2019 is in the blue, and this is the number of sales per month. And this is single family homes, condos, townhouses, lofts. And if you look, 2019 started a bit slower, and you kind of saw this springtime rise, right? And we sort of crested in the summer number of sales, and then it just kind of tapers off as the year ends, right? That's pretty normal. I would say this graph looks very similar to a graph of any other year. And then in the red here, we have 2020 right now. 2020 actually started off better than 2019 in terms of number of sales, a very strong market. It was getting ready for its spring ramp up. And then something happened. In here, we have this giant hole in sales data, right? And, obviously this is COVID. And if you look, remember, homes that closed in April and May, those are the homes that were negotiated, the contracts negotiated in March and April. If you remember what March and April were like, those I think were the trickiest times. There was a lot of uncertainty. People didn't really know what was happening. And then I think by the time we came in here, guess what? Interest rates are low and it's a great time to buy a house. And you actually see by July, our sales numbers were the same as 2019. And then after that, they've been higher for the rest of the year. Every single month after July and August, sales in 2020 have been higher. And I think what a lot of people, one of the narratives that we've done in the past couple months when we talked about this was that the market felt like it was delayed. And to some degree it was, right? Like here we continued rising where sales normally fall. But then you saw actually, we're following the same pattern that we normally follow if you look at our November and December sales, kind of this gentle lessening of sales, but still at a higher level than 2019. I actually feel like this sort of time delay that we may have had, I think that's actually eased up. I think we were kind of on normal sense of timing. We're just in a very busy market. So one of the things though that I think can really put this in perspective, like this graph, this looks like a pretty gnarly graph, right? I mean, look at the difference here. Over twice as many sales in 2019 in that April-May timeframe as in 2020. These look like huge differences. But if we look at our cumulative home sales, this is really interesting, right? It turns out that this isn't quite what we thought, right? If we're looking at our cumulative, yes, we got behind, and then we just kind of caught up by the rest of the year. And the reality is that 2020 really was not that different. And if you look, our lines actually ended up pretty close together here. And our next slide kind of, I think, really illustrates that super clearly. So these are the sales totals in our category. Remember, this is Los Angeles and Orange counties, single family, condo, townhouse, loft. For 2019, we had 89,801 sales. And in 2020, we had 87,880 sales. And the reality is, this is actually about 1%. So by the end of the year, for sort of all the hoopla about COVID and about the market and all these things, the reality is that our sales were almost identical versus 2019 in terms of our total number of sales. So, if we're talking about number of sales, really this year was not terribly remarkable at all. When it was all said and done, it really pretty much evened out, though it didn't feel like it at the time. Now we're going to kind of move on to talk about pricing, right? Because I think, there's really two things that people want to talk about: availability of housing and the pricing of housing. Probably the third thing is affordability, and we've kind of talked about that all year long. But if we're looking at the pricing, I think it's also important to sort of look at these graphs and to see how our market sort of normally flows. And this is our median home price by month. And what we did is to make the stat gathering a little bit easier, we took the first week of each month, partly because we're not all the way through December 2020 yet. And I wanted to do this week. So if we look here at this median home price graph, there's a couple things that I think are really noteworthy. And one of the things you'll notice is that these graphs are not straight lines, right? This is not a line that simply starts low at the beginning of the year and heads upward. That's not how our housing market works. It kind of ebbs and flows to some degree. And, if you look, there's always these key moments, right, where prices sort of jumped a bit. And you can tell when that happened. I think what's really fascinating is there's one thing about 2019 that was a bit unusual, and that was that our market actually strengthened towards the end of the year in 2019. As you can see, this number just about equates to where we started 2020. Normally, median price tends to actually fall a little bit in the last couple months of the year, but in 2019 it did not, and in 2020 it did not either. But if you look at 2020, I think 2020 is really interesting too. We started to get our spring bump, right? This is what we always have happen. And then it just really kind of fizzled out. Prices didn't like wholesale fall. They just kind of skated through April, May, June. And what's interesting is that's normally in our growth period, right? Like in California, that's a growth price market. But our growth period didn't come until later in this year, this June, July, August, which really is sales that were negotiated in May, June, and July. And there we just saw huge growth in prices, things leveled out. We got another little bit of bump. They kind of softened in October a little bit, November. And then, boy, they just resumed that kind of upward trajectory. Again, I think we are primarily being driven by a lack of inventory. This is an inventory constrained market, one of my favorite terms to use. Not my favorite market to be in when you're representing buyers, but I think that's really how you can characterize this year when you're looking at this. The other thing I was going to mention here, when you look at this graph too, is, and I know I mentioned this sort of at the beginning, but really, there's a lot of micro movements to median home prices, right? Like there could be a week where there's some really bad political news or some bad economic news comes out, a string of bankruptcies, interest rates rise, interest rates drop, and these things definitely have an effect on the markets. And you really just have to kind of have your eyes and ears to the ground to sort of recognize that the market is kind of a living and sort of breathing element. It's not just a mathematical function. Now, one of the things that I also like to do is, this is kind of an unusual statistic. So this is average sales price by month. And there are actually a lot of problems with average sales price. Here's the difference between the median home price and the average. And you'll notice most market statistics are based on median prices. They're not based on average prices. So the median home price tries to look at the number of homes that sold and pick the one in the middle. So for example, if 100 houses sold, the median price is whatever the price of the 50th house were. And that would be your median price. And the nice thing about the median is the median doesn't get upset by outlying numbers, right? Like if a house sold for $120 million or $200 million, that's not going to really affect the median very much. That will not have a huge part in that. So it's a more stable statistic. And the average would be affected by that, right? Because we're going to add up the sales price of those 100 houses and we're going to divide by 100. And if we had $120 million house, that will actually sort of upset our numbers. And I'm using this number, that 120 million in particular, because that is actually exactly what happened in July of 2019. There was a $120 million sale in Los Angeles. But what the average is great for, and I think this is really good looking back, is I feel like the average home price is a great indication of consumer confidence and sort of how confident are consumers. And the reason why I say that is confident consumers who are confident in the housing market and the economy overall, they will tend to spend more money. They will tend to buy houses that are a little bit more expensive. And in a normal median statistic, that might get offset by, for example, people just coming in and buying cheaper houses. Whereas people increasing how far they're willing to go for houses is kind of indicated by this average. So if you follow along here, right, 2019 was a pretty stagnant year, which is about how it felt in terms of consumer confidence in housing. And then we had this lift towards the end, right? Consumers started thinking housing was a good thing, and we saw our market strengthen. If you look at this chart for 2020, you see a different story. The market started off very strong, and then it just kind of, the strength deteriorated until this May timeframe when, things just jumped up. They eased off in the middle of summer. They plateaued this consumer confidence, and then it rose back up again. And I think that's really that's a pretty accurate narrative of sort of how our market in 2020 went. I think we all know that there was a moment where it felt like the market just completely changed, and it was around this May, June, July timeframe, right? That's really when it just felt like prices just went off the hook, and you can really see that clearly in this graph that's kind of showing this sort of market strength, market health amalgamation. Finally, I thought we'd take a look and just kind of put some raw numbers to this, right? 2019 was actually a really good year as far as median price was. If you were a homeowner, you gained about 7% in equity from the beginning of the year to the end of the year overall. And most of that actually came towards the end of the year. However, 2020 was a blockbuster year, seeing 15% median home price growth in Los Angeles and Orange counties. I mean, that's just, I don't think that's really a very repeatable year. Now, I'm going to talk about something else that I think is a question that I've been asked a bunch of times separately, and I think it's really important to address. And people are asking, how much of that median home price increase do I think is due to low interest rates? And the reason why that's important is because if low interest rates go away, what necessarily happens to that median price? Well, I think a good portion of that is a result of interest rates. I think the other portion of it is sort of changing consumer taste. I think work from home, the desire to have more space and be in less dense environments, I think those also were very strong players in pricing and price increases this year. I think a lot of people realized that the home they owned was not the right home for them and that they needed to make a change for kind of their changing circumstances. So I think that's kind of driven people buying larger houses, and that's increased the median home price to some degree. But I think the big portion of that is going to be those lower interest rates. The bad news is, well, what happens if rates go up in 2021, which we think might happen more towards the end? But will those gains get erased, or will they just stop in their tracks? I'm actually inclined to think there's a little bit of room for interest rates to go up and prices to stay flat and not decrease. And the reason why I think that is, again, when we go back to that payment, we are still at below 2018 prices in terms of payments. So there's room for those payments to go up in our market even before we just get back to where we were in 2018. Anyhow, that is our 2020 wrap up. I hope you have enjoyed it. I've certainly enjoyed doing it. We will have our first time home buyer sort of market 2020 wrap up as well. That will come this Friday. We will be doing that on New Year's Day. So we will do it in the afternoon. So hopefully you won't still be hungover. And yeah, we love your questions, comments. Don't forget to like, subscribe, hit that notification bell, and we will see you later on this week.